All right, I say hello to all of my good friends. I greet you with the hashtag joyant, jubilant hello. How is everybody doing out there in the trader universe, or any universe for that matter? My name is Doug. This is Trade with Doug, and welcome to another market review and recap. Today we've got a slate of incredibly cool stuff for you. I will be first talking about the Fed, some important points that the Fed had spoke of today and how that affects our trading going forward. We'll take a look at the couple of trades that we're working here over the last couple of days that we mentioned in the weekend market mutterings, as well as the last couple of videos and a couple of stocks that we're going to look for as the week progresses. So we'll begin as always there with the Fed. And before I start as well, if you guys are sitting out there right now and you're saying to yourself, you want to get your trading to another level, I encourage you, either here on the screen or down in the description box, click on the link and follow that and trade with us live. Now, if you want to see the historical results of the program since inception, I've kept accurate record of that. I encourage you to send me an email. I know I'm using the old one, support@thelincolnlist.com. Send me an email. I'll send you over the historical results if you want to see that. So let's begin with the Fed. And I have to say, it's been a while since the Fed's been center stage with a meeting. Now, I know some of you may say, well, the Fed is always important. And it is. They're the biggest market pumpers ever. But there was a time when I first started, they're 99 on up to, I'd say 2014, where it was just really an unpredictable time when the Fed was speaking. You got extreme volatility in the markets. Now, somewhere around 2014, that changed. Yes, there was always an impact, but it was so insignificant compared to how it used to be. I always love telling those old time stories. Doesn't it remind you of like when your parents used to say, well, I was your age, I had to walk 20 miles in the snow. Well, when I was back then, we had to eat popcorn while we watched the Fed, that kind of stuff. Anyway, it's definitely changed. And today, though, was a little bit different. There's been a lot of pressure here over the last month or so, focusing on inflation. Inflation is now the dark cloud. It's now the trade war. It's now the coronavirus. It's now the next thing that weighs itself over the market. So if you guys are new to trading, this itself is nothing new. There's always a dark cloud that's looming somewhere. There's always the doom and gloomers. That's never going to go away. So all eyes on the Fed. All eyes on me. All eyes on the Fed. So, this is how I feel about this when we were going into it. And the meeting's already, well, the meeting's not over, but most of it's already over. They're important nuggets, I should say. I feel like if we go back to 2018, Jerome Powell tried to do the right things by raising interest rates as the economy got stronger. Well, of course, he tried to do that in December, and the market just wasn't cool with it. We kind of remember what happened there, don't we? The market just got smoked for like 30%. And Steve Mnuchin there had to call the banks or something on Christmas Eve, if I remember correctly. It got pretty messy. So he had to kind of retract that. And I think from there on, he became somewhat of a puppet. And, we all know how Trump was also a very big-time market pumper, and he really wanted him to force rates lower and lower and lower. Now, the question that we always raised, or that investors and economists would raise, is that if you don't raise your rates during a strong economy, and you don't do, regular raises, then the Fed is basically backing themselves into a corner by not having any firepower in the case of a crisis or a recession. Well, enter coronavirus. Now, once coronavirus comes along, the Fed has no real power. They cannot raise rates at this point. And I think everybody realizes that. So the longer that these rates remain at zero, or the longer this recovery takes to get back on our feet after coronavirus, the more inflation becomes a concern. So now all of a sudden the market puts that issue front and center. So here's a couple of the tidbits here from the Fed speech that we'll talk about. This is obviously not all of it, but some things I feel that are most important to what we're doing as traders. So I think first of all, the positive is the Fed ups the GDP forecast 6.5 in 2021 from 4.2. So, I think a lot of people were feeling that we were going to go in a longer term recession because of coronavirus. So when you're looking at a couple of these, if I go down here, for example, I don't have these in particular order, but this one here, let me get a better color for everyone. So, the Fed sees better GDP. You come down in here, recovery has progressed faster than expected. When you see those things, you're feeling, okay, the recession thing is off the table, at least for now. So that's a positive. Inflation here obviously was the top center here, 2.4 in 2021, up from a 1.8 estimate. Now we're going to talk about the market here in just a second, but right now that's not too threatening, as there's a little bit of time left in the day as I'm doing this, obviously. But the way the market's reacting, that number itself is not threatening. Now I also want to take this time to kind of just talk to you guys about why we don't have biases at traders, and why I feel that much of this stuff we talk about with fundies, earnings, this stuff, to some degree, I don't mean to be harsh, but it's bullshit. Because I'll tell you why. We could read this and I could say this is terrible. Somebody else could read it and say it's great. Who really decides this? The market, right? It's the market's job to tell us what it thinks. We have absolutely zero power. This is why I always recommend that traders out there don't trade through earnings, because it becomes a wild card. Because your personal beliefs of that company and what that company will say doesn't really translate to whether or not the stock price will reflect what you're thinking. So, example, many times companies will beat earnings significantly, but yet the stock will drop. There are several companies that are trading 100 to 200% gains this year that make $0. This is the market. It's a speculative instrument, and it's fickle and finicky. So obviously the way I'm translating this now is I don't really care what these numbers are to a certain degree, but this 2.4% isn't a threatening factor to the market. When we're talking about rates here, the next thing that would take center stage is when and if will we see some rates? Are we going to go on a 5 to 10 year freeze of rates and never see rates again? Are we going to go negative interest rates? So right now, all the Fed officials see rates unchanged through the remainder of 2021. So the market now has priced in 0 rate increases from now until the end of the year. And I think most of us kind of thought that. Now you're split here a little bit as you move on. You've got 4 Fed officials seeing 22 and 7 Fed officials seeing 2023. So now the balance of power, the consensus, is that we are not going to see any rate increases now till 2023. So that's taken some of the pressure off here about how things will continue to operate. You're seeing probably the most important statement, the Fed will continue to provide the economy with whatever it needs, and Powell is pretty much saying the same things. He doesn't see any asset bubbles, inflation is not a concern, and no worry here in the United States. He's an incredible person with what he sees. So here's what I take away from that. Rates are going to continue to remain unchanged. So whatever the borrowing power, the buying power, the real estate movements, all of that stuff, the availability of cash to people, that will continue. The Fed is also continuing their flooding of the market with printing dollars, whether we agree with that system or not, whether our next generations have to pay back this enormous debt that we're running up here, that remains to be seen. But that's what's going to happen. They're going to continue to flood the market. So when investors are looking at this, you are still getting free money, you're still getting easy money, and you are still getting the Fed's got your back by supporting the market itself. So now the fear has just literally removed itself the way I'm translating. Now the market still needs to verify that. But to me, it just reads business as usual. Now you can certainly point your finger at a couple of these and say the Powell's full of shit. Like asset bubbles and stuff, but that's not for me to decide and to judge. So I just kind of want to go over that. Nothing real surprising in here, but I think if there is the biggest positive, I would put it down to the forecasting GDP to be a little bit better than what we expected, and the recovery seems to work a lot better than expected. Over the last few sessions of these speeches that we've had here, these dialogues between us, I've said the coronavirus has fallen significantly, and that's very good, especially in the United States, really aggressive campaigns to get everyone vaccinated. So those numbers look very promising. The road to recovery looks like we can see the light at the end of the tunnel. So those are good things. Now, it's been a few minutes since I've been doing this, since I checked Mother Market, but let's take a look at what we got going on here. I want to put let's go with the S&P. I'm going to use the E-mini futures here. So, after this stuff was released, you see there was a pretty positive reaction. So the market is pretty favorable with this. Now, one thing I have learned over the history of trading through Fed talk is it normally takes a day or so for everybody to just kind of digest what has happened. There's normally a knee-jerk reaction that first, there was always this joke, the first move is always wrong. So back in the yonder old days, whatever the first move was, if it was up, it would immediately correct itself. If it was down, it would immediately bounce. It was almost like clockwork. Well, things have changed here a little bit, but I'll give you my personal opinion. I can only use the technical tools in front of me. My predicting of the future is just as terrible as anyone else's. Pretty nice move. Now it's gone at least, let's see, what, I don't know, an hour, maybe 2 hours here already. That might, a couple hours we hear to digest this move, at least an hour or so. So much of this gets digested. The longer that it can remain up here and hold the majority of this, the better off this will be going into the following day. Now, if you happen to lose this, you know, then we can look at lower prices. But right now, this is bullish. It confirms the charts that we've been talking about. We've been more to the bullish side than we have the bearish side. The Fed now has just confirmed whatever it is, whether we agree with it or we don't agree with it. That's not the point. The point is we react and we make money and profit off of that. So I still would give this another day, a little bit of time into the morning. Let this settle down with investors overnight. Let this settle down with European markets, Chinese markets, Japanese markets, you know, other foreign markets. Let them digest in there, see what some of their reports may look like, how they're going to keep their rates and stuff, and just give it some time. If this holds up, this probably, in my opinion, really where my focus has been here is on the QQQ, because that's the one that corrected. The Dow is still screaming to highs, IWM, the SPY. But I said on Sunday in the market mutterings, I felt this thing was going to start trading back up here. And I felt that the others were strong enough to lift this one out of the hole. That what we saw here was just a normal part of a normal correction that we've seen here in the past. Those look like eyes, don't they? Right? It was just a normal part of the correction, and it will trade up there. I will be more convinced of that if we solidify this by tomorrow morning, we don't gap down or get any stuff early in the first hour or two of trading. Now that opens the door for some great trades. Some of the ones that we've been talking about here too, I'm going to give you my favorite. Maybe some of these you already heard, but I think they're still great trades. One is Teradyne. We talked about the fundamental strength of this company, how solid this company is. Really good looking chart right here. It's got a lot of room to the upside. The farther the Qs go, the farther this one can go. I think we can focus in on that 147, 150 target for this one. I do like this. We'll need a little tiny break above this recent range, but you should at least fill in some of these steps right here. That's one of them here. I think in one of the growth stocks that I mentioned, one of the best ones in the last video was ESTC. This one also looking very good, building a really, really solid pattern. We'll also need a lift out of the range here. It's got that lowercase L look to it, but I like those. Those are my two favorite. Well, actually, let me give you my three favorites. I've got ACOM in here as well, AKAM. I think these are some sleeper picks. I've put them on all kinds of different watch lists. I've been talking about these stocks lately. They're all looking pretty good. The entries that I have on these stocks that I'm in here, these three, looking really nice. Now there's some other ones here. I'm going to throw just a couple here that are on my mind for some trade ideas. I'm going to throw in Facebook here. I just want to quickly take a look at this one. Not necessarily my favorite chart pattern, but this is undeniable strength. I feel like it's a bit of a chase right here, and it's very close to significant pieces of resistance. So if you're looking at this range, this is a very strong ceiling. So if you guys can remember, I've always used this analogy. If you're in a room like I am now, you're looking at the ceiling up here, and then you got the floor. The further you get to the ceiling, the more selling orientation you should have, and the closer you get to the floor, you're buying. So I'm looking for things to tap down on the floors and then run back to the ceiling. That sort of mentality. So the fact that it's on the ceiling here kind of annoys me a little bit, but sometimes these things get a little out of control. Now, I normally won't swing something that looks like this, but I will intraday trade it because I have more power and flexibility to get in and out during intraday trades. So that's what I will do. I like this one just for a trade. I do not want to swing this one. I kind of still on these stocks here. I've had some great success with them, but I haven't been in them for a while when the whole Bitcoin thing was, I mean, Bitcoin is still crazed. Is Mara, Riot, these Bitcoin miners. This is how I play Bitcoins rather than just playing the Bitcoin itself. These really look like they're just not done. And I think here's another thing you have to look at too. I'm going to spend one time talking about this speech. Is in my original perceptions when it came to Bitcoin and other altcoins in the beginning was negative. Now it's moved to positive. And I think the reasons for maybe some other people seeing it, and I congratulate you if you did, but I'm seeing more of this world we're going to, this inflation hedging. The threats of inflation, these mass riots, these pandemics, this one world system sort of makes me feel now that, Bitcoin is that standard of one world currency. Now, I know I'm getting like biblical here at some point, but I'll spend some other time in the future talking about that. My perceptions have changed. That still doesn't shelter the fact with me that it's a little bit short-term overbought. But hey, I think, it's obviously now, any of us who were saying that Bitcoin wasn't going to be around, it has staying power, we were wrong. And that's it. It's an asset that more and more people are accepting, and there is more room for that thing to go, but that's another speech. But I like these. I like playing it with that. So I'm going to kind of cut it there. I got a little bit winded here. Just a basic recap, guys. I still believe that the Qs are going to be strong. They're going to go higher. Jerome Powell is a puppet. He has not done anything out of the ordinary. They will not raise rates. They will not damage this recovery. GDP looks like it's going to go better. The positivity and the consumer confidence from getting out of this coronavirus mess looks like it's just around the corner. So there are a lot of positives. Now, how much of that's priced into our current market, I don't know, but we're going to find out. But anyway, I'm going to kind of leave it there. I want to thank you guys for, just hanging out with me here. As always, if you like the video, click that you like it. Stay up to date by subscribing to this channel. If you have anything that you want me to discuss in any future things like this, just put it down in the comment section and just chat with me at any time. Other than that, guys, take care, trade well.